Welcome to the B.F. Anderson Report, technical report for February the 3rd. Jesse Livermore was a famous investor back in the 1920s. Many books have been written about him. One of the best was The Reminiscences of a Stock Operator was one of the books written about him. Livermore was quoted often, and the quote I've got here on the screen is it never was my thinking that made the big money for me. It always was my sitting. Got that? My sitting tight. So Livermore was actually a trend follower. He was a big believer in trend analysis, and once you got a trend established, it was best just to sit tight. So what I wanted to do this morning was just to go back through history and look at the Dow Jones Industrial Average. I'm starting out here in 1980. Now, I think the most important thing to remember about market history is that it does tend to repeat. It does tend to, because human beings just don't change. I mean, it's all about fear and it's all about greed. And back in the 70s, actually I started in the business in 1976, you could not give a stock away. I mean, the primary investments that people were interested in back in the 70s was inflation-related investments because we had high inflation and that was apparent. And they also wanted tax-favored investments because the individual tax rates were substantially higher than they are today. Then Reagan came along, got rid of all the tax shelters, and that all changed. But anyway, if you go back here, you have to realize that the market peaked in 1966. Now, unfortunately, the graph doesn't go back to 1952, but when Eisenhower was president and the economy went through a real heavy-duty growth cycle, we had a bull market from 1952 to 1966. So the market then started to go sideways. It went into what we call a consolidation phase. It went into that consolidation phase for 17 years. So it was a really pretty difficult period. But then once we broke out and started to move up, we did not really see any corrections until the crash of 87, which would be this here. Now on this graph, I have put a 50-month moving average, and this would be about sitting tight, because the key to an uptrend is not to get shooken out during periods like this or periods like this. And if you use a long-term moving average, chances are you're going to stay put. So we broke out in 83. Now, the thing that happens with these bull markets is you get into areas where there's leadership. So for example, back in 1973, a little company pops up called Walmart. Well, at $10,000 in Walmart invested in 1973, by 1990 was worth about $12 million. So finding the market leadership is really critical here. So we break out, and the main market leadership that really started to develop in here was things like Dell Computer, Compaq Computer. It was the personal computer, IBM, so forth. It was the computer age. So if you were in these stocks during this period here, you did extremely well. Then around 1986, a little company goes public called Microsoft, run by a fellow named Bill Gates. Then after the crash of 87, we resumed the uptrend and things really got going well. And then around 1995-ish, in this area here, you started finding companies like Cisco Systems, Yahoo, America Online. And then around 1997, a little company goes public called Amazon, which is now the Amazon.com, and we all know the story there. So then we continue to rally. Oh man, 19 years of sideways action. I mean, this consolidation box has been absolutely brutal. When you're a trend follower like Livermore or like myself, it is next to impossible to be successful when you've got a sideways trend like this. Now, around 2012, a little company went public called Facebook. That was an interesting play in here. In other words, you can see we broke out of this consolidation box and started to move up, and it was really being led by things like Facebook. But we also found another company called Tesla, which I'm going to talk briefly about this morning. Then we go back into another 3-year consolidation box. So if you really think about this, the market has been pretty much consolidating for 22 years, which is a heck of a lot longer than the 17 years back in the 70s and the early 80s. So, the old rule is, long consolidation, good market. Long consolidation, good market. So hopefully what we're looking at here currently, which is where we are now breaking out of a 3-year consolidation box, hopefully we're going to be entering a good solid uptrend with a lot of new leadership. So let's just take a look at something real quick here. As I go around looking at different opportunities, and I look at, there's 10,000 stocks out there, and you've got to figure out which companies are going to have technologies that really make a difference. Well, there are major advances going on in battery technology. Now, battery technology is very interesting. What they're doing is they're basically finding ways to increase the density of the battery, which means they're able to compress more energy into a smaller area. Now, Tesla has just announced a battery plant near Las Vegas, Nevada, called the Gigafactory. And what we're hearing is that they are increasing battery density substantially. Well, the way it kind of works is this. You have an anode, you've got a cathode, and then you've got electrolytes in there. And what they're doing is they're finding different electrolytes, they're finding different materials to make the anodes and the cathodes out that they're now adopting that are increasing the battery density. But also, they've got to be very careful because these batteries, in my opinion, the whole risk, one of the primary risks to battery technology will be, do these things start blowing up and catching on fire? So, they've got to test these things and make sure that these batteries are not going to be dangerous. Now, the other thing going on with Tesla is they've come out with a new battery called the 2170, which they're going to mass produce in Las Vegas, near Las Vegas, at the Gigafactory. Now, once they get into mass production, I believe that just like television sets, you start mass producing electronics, the price comes down. So they bring the price down substantially. They increase the quality of the battery and the life of the battery. This could really offer a very interesting situation. Now, there are risks, of course, to this investment. But this really is one of the most interesting companies I've ever invested in. The other risk I would think would be if something were to happen to Elon Musk, who is the CEO. And if you go back through time, you happen to notice that, Sam Walton ran Walmart. You have to notice that, Michael Dell started Dell. You have to pay attention to the fact that Bill Gates started Microsoft. Jeff Bezos started Amazon. These are special people. This is really the key to the whole door, is that who is running the company. Now, the other thing going on with Tesla is they are coming out with something called Autopilot 2, which is autonomous automobiles. Now, I witnessed a recent video of Autopilot 2 where it actually predicts an accident on the interstate in front of a couple driving a Tesla. It predicted the accident. So the speculation could be, will autonomous technology become so good that it becomes a mandatory safety feature? Anyway, it's just one to look at, and I did want to kind of take you back through history because there is a repeating pattern here. Strong CEO, good earnings, good revenue growth, uptrend. Hopefully that's what we're looking at. If you have any questions, please give me a call. Thank you.